Now, I really want to go ahead and make this video dedicated to all the newbie traders out there that you're looking to go ahead and get into the market, buy stocks, day trade, swing trade, get your first account, whatever the case may be. Now, I am just basing my theory in this video off of common statistics. Like here in the United States of America, I believe about 50% of Americans don't even make 100,000 a year. Like when you consider Americans that make over $100,000 a year, the percentage is really small. And when you start to get up to $200,000 a year, the percentage is like 3%. It's really low. So just thinking on that, a question that I asked myself is, what is the typical newbie trader coming into the market and funding his account with? And I really want some input from all of you guys out there watching this video. This is going to be real important to kind of let me know where you guys are at, because I don't know. So I'm really kind of making some assumptions. Let me know down in the comments, as a newbie day trader or swing trader in the market, the first time you funded your account, how much money did you actually put into it? And the reason why I ask this is because it's in my opinion that as someone coming in, if you really want to be able to take advantage of the market fully in swing positions, day trading positions, scalp positions, whatever the case may be, you need to have a trading account that is at least, my ideal number is $20,000, because under proper risk management, if you're using 2.5 anywhere up to 5% trying to keep your account safe, that will somewhat to an extent give you a proper trade in the market as far as what you have in it and what's actually going to be your return when you close that trade in profit. So when I think to myself honestly about someone, I tell you, let's hypothetically say you're sitting here watching this video. You are working two jobs. You got a full-time job, you got a part-time job. You got a little side hustle going on, but you're kind of completely maxed out, and you're currently making $60,000 annually. You're a newbie, you come into this and you tell me, hey, I want to go ahead and start day trading tomorrow. And I'm really doing this for the crowd 35 and under. If you're over 35, it could be possible that, hey, you know what? $20,000, hey, let's go throw. But the early 20s, late 20s, I'm going to put this hypothetically out there, that if you're getting your money legally, $60,000, and trust me, I'm at the point in life where, hey, $150,000, $200,000 is no money. So I'm but $20,000. It's in my opinion that your average newbie trader coming in the market isn't probably even funding their trading account with $10,000. So with that theory of mine in my head, I wanted to go ahead and make this video, because it's like, should you even trade? Should you just wait and save your money up till you get to that ideal point of $20,000? My opinion is no, it really doesn't matter how much money you actually have. If you've gone out, you've tested some strategies, you have a decent trading education behind you, like support and resistance, you could plot out your trend lines and everything like that, you can go ahead and get started. I've said this previously, I'm not a fan of demo accounts. You will not trade a demo account the same way that you will trade a live account with your own physical money in it. No matter if it's $100, $1,000, $10,000, you're going to trade it differently. So for the person out there, let's hypothetically say you're somewhat in the middle, you have $5,000, which is still a decent amount. I know there's some people out there that's probably putting in a couple $100s to go ahead and actually make trades. That's fine and dandy also. I just released a video previously on this channel where I spoke about being in the right mindset. if for all my aspiring day traders out there that you might have a couple $100, couple $1,000, I'm gonna give you my theory and my idea on this whole thing. It's going to be very important for you to put it in your head. And I know it doesn't sound sexy, especially you guys out there watching this video on YouTube, because every other channel out there, they'll pitch this crazy lifestyle and no, you'll be making money tomorrow and every trade will be profitable. I have all of the answers, when in all actuality, if you buy into that, I'm going to straight up let you know you're going to be in for a world of hurt. I am a true believer of setting the expectations to the bare bone minimum so that you can get to a point where you can exceed, where you expect it to be. So just like how I gave you guys my theory on $20,000 is the amount that you need to have, when it comes to this, I really believe that you should set it in your mind that, hey, you know what? I'm going to dedicate myself to this. I'm going to give it all. I'm going to go about my life, all the extra time that I have to dedicate it, I'm going to do that. I am going to learn. I am going to experiment. I am going to try to be the best trader that I can be for the next 12 to 18 months. That's essentially a year and a half. And I have zero expectations of making a dollar out of the market. And depending on where you're at in your journey, if you only have a couple $100, you might actually want to set that out to 2 years so that it allows you some time to do compound interest. It's my biggest thing for anyone out there that's trading with a low amount. If you really are dedicated and you want to go ahead and get yourself up to that $20,000 mark, compounding your profits is definitely something that you want to do. Too many times I see people, hey, you know what, listen, you say you want to get to the next level, but I'm watching you, and you started off with this $5,000 account. You doubled it. You're at $10,000 now, but you go ahead and you make that withdrawal for $4,000 or $5,000 to go buy yourself some new Jordans or buy yourself a new car or put a down payment on a new car, whatever the case may be. And when you have a small account, you're really just setting yourself back when you do things like that, because now you're back to what you originally funded your trading account with. And in all actuality, if you had just left that money in there, you would have been halfway to the mark of $20,000. And I think maybe it's possible that so many different people set their sights and their vision so low, because it's like, if you're under proper risk management doing trades, you have this $5,000 account. At max, you're actually taking $250 trades. Where now, if you had left the $10,000 in and not did that withdrawal, 5% of your account now, you're talking about $500 that you can trade with. So you're leaving this money in there, you're growing it, and don't get me wrong, this is not anything that's going to happen quick. This is something that's going to take some time. But what'll wind up happening is, if you start in March of 2023 and you fast forward out all the way to March 2024, and you might have your $20,000 account now, hypothetically, let's say, from your $5,000, and now you're in a point where, hey, you know what? I was taking $250 trades, but now I'm taking $1,000 trade. So instead of making, let's say if you were on a 1 to 2, instead of making $500, I'm making $2,000 now. So now, and the reason why I set that number of $20,000, the more money you make, typically, unless you can control it, your lifestyle is going to change. So When you were not taking money and you were compounding, you might have been living in that wonderful 2-bedroom apartment paying $2,000 a month. But now you got the $20,000 account or the $50,000 account. You're making 5 times more money now, and it's like, hey, my lifestyle is going to change. So in return, it's going to take me more money to maintain my lifestyle. So that's something that's dangerous too. So, and I want to point that out there because I gave you guys the number of 20,000. The way that I want you guys to think about it as is, think about it like this. You're setting a 3 to 5 year plan. And what you have to ask yourself is, what dollar amount do I need to take in every single month to maintain the lifestyle that I dream to have? I'm going to leave you guys on that, and I really want you guys to think about that, because whatever you profit off of your trading account every single month needs to add up to that. So a lot of people, I feel, they don't really reverse engineer it to the point to say, hey, I want this lifestyle. This is what I dreamed of. This is what I want. How much money does it take to get there? That dream house that I want, those fancy dinners, how much would it all cost? And if you're basing making all of this money off trading, you need to then go ahead and figure out, well, how much money do I need to have in my trading account? And on average, because we have this whole year that we've been journaling, compounding this account to get up to that ideal dollar amount, it becomes a point of, okay, how much money do I need to have? And then also, what is my typical percentage on this account that I profit every single month? And you can do the equations and the calculations from there, and then, you know, you're actually all set. But I guess the point to this video is you really need to, delayed gratification is, too many people are thinking in the now. Stop thinking in the now, please. Build a plan that's 3 to 5 years out, and you will actually thank yourself that you actually did that 5 years to now. Money Making Joey, I'm out of here. I am going to see you guys in the next one. Give this video a thumbs up if you found value from it. And if it's your first time watching me on YouTube, do definitely go ahead and get subscribed to the channel. I'm out of here.